Well, hello, folks. Welcome back to another edition of the Forex Market Preview. My name is Jason Stapleton, and today we're going to go over a little bit of analyses and do some walkthrough of some technical analysis for you guys. So if you haven't, for some reason, ever been part of anything that I've done before, you're going to get a chance to walk through the market. And if you're very new, this is going to be a good exercise for you in understanding how to look at a market, how to decide whether the market is bullish or bearish, and how to come up with some ideas about what to trade and how to plan your trade. And if you're new, if you've been with me for a while, this is going to be a good refresher for you. And so let's go ahead and flip over here, if I can make this thing work, and we will take a look. First of all, here's Euro USD. This is a syndicate trade, and if you don't know, if you like this type of stuff that we're going to do today, then you will probably like the syndicate, and the syndicate is nothing more than a program that I run every single day similar to this one. So every single day we come into War Room, which is kind of like our morning boardroom. So if you think of this, I'll kind of run through the idea. You think of this as kind of like a proprietary trading firm. If you go to a proprietary trading firm, what tends to happen in the morning is everyone kind of gathers together in a boardroom or in a conference room, and they discuss what's happening that day. Are there news events coming out, or what stocks are in play, what's everybody watching, what's everybody thinking, and we kind of put together a collective game plan on what they're going to watch for, what they're going to try and do that day, and where the trades are likely to appear. And then everybody goes, boom, they all go out to the desks and they trade their day, and then they're done. And so what I tried to do was conduct the same thing, because one of the biggest questions and biggest requests that I get is, hey, can I come and just sit with you and trade with you? And the answer to that is absolutely not, because that would be incredibly expensive for you to do, given all of the other stuff that I'm involved with, for me to take time out to do that. And I said the second thing is you're going to be pretty bored, because the way I do it now is most of my trades are out before 7 o'clock in the morning, before the market moves in New York. And I try and catch the morning run, and I found that to be a very effective way to trade. And some of the stuff that we've shown you in terms of equity curve is the result of that style of trading. And so, but I came up with this idea and said, well, is there a way that I could let somebody look over my shoulder, see what I'm doing, listen to me explain the why on a day in, day out basis, and start learning what it takes to be successful, and how you begin to gain that discipline day in and day out. What's it like for a trader who knows what he's doing when things go wrong and when nothing is working, and when you're coming in day after day and it's just loser after loser after loser? How does he handle that versus you? Does that even happen to that guy? Because that's another big question. We have this idea in our head that all this great stuff, that someday we're going to become this trader where we never have consistent losses anymore, where those are a thing of the past and all we do is come in every single day and print money. And unfortunately, it's not like that, even for the very best traders. They all go through periods where things just aren't clicking. It's how you deal with those types of issues that really separate winning traders from losing traders. How do you deal with that sort of psychological pressure day in and day out to come in and constantly, the pressure is constantly on to break your rules. When things aren't working, there's this natural tendency to want to change what you're doing. And so the War Room and Syndicate is designed to be your window into how does a professional trader do it day in and day out. And then on top of that, can we meet every day in the same way we would meet if we all worked on a same trading desk together? And can I share kind of what's happening with my trading and share with you where I think the best opportunities are going to be? And so Akil and I both place all of our trades in real time, and then we send you those trades in real time through some custom-built chat software that we have that allows you to see the trades. So we place the trades and we come in and talk about it, and then you get to go out and kind of, with this knowledge and experience that you have as being part of the syndicate, can make your own decisions about how you want to trade. So that's kind of what the syndicate is, just if you don't know. And this is a trade that I have on in the syndicate. And if you want to know kind of what it is, it's a simple trend continuation trade. So the market has been in a bearish move, had a little rally here, another little drop off, followed by a retracement back up into previous structure support, should become resistance. We look left for the structure here. Okay, stops above the structure level, giving us this much risk. And what we're looking for is we're looking for this market to continue in its downward direction, at least to retest the previous lows. Now, we're not looking for an extended move. So this isn't a trend following trade. This is a trend continuation trade, meaning we're expecting the market to continue in the direction of the underlying trend at least until we hit previous structure. And we're trying to make a little bit of money off of that move when it occurs. And as you can see, the market rallied a little bit higher. We ate it through about half of our stop placement, but our stops, at least to this point, have never been at risk. And this is a hard pill for people to swallow too, because they're saying, well, if that was resistance, how could the market just blow right through that? And doesn't that mean that that resistance, that support level doesn't mean anything anymore? No, it doesn't mean that at all. All it means is that if we're in a bearish trend, if new structure lows are being violated, then we ought to be able to look left and say, hey, we should have a greater than 50-50 chance of the market, if we sell here, of the market returning to the lows before we violate the highs, before we violate this structure level. And that's all we're saying. And it turns out we do have a greater than 50-50 chance. We have somewhere around a 57% chance. So we combine this knowledge that we've got a greater than 50-50 chance of being correct when we do this consistently with the idea of having greater than a 1-to-1 risk to reward ratio. In this case, we have a 1 to 1.62, or basically a 1 to 1.5. So we have a greater chance of being right than being wrong, plus 50%, and we've got a risk-reward ratio that means we're going to be paid more when we're right than when we're wrong. You combine all these things together, and if you can trade it consistently, and that is the key, if you can trade it consistently, you're going to find yourself making money. Now, let's talk about how this works in reality on something that you guys can take a look at this week. So we're here on pound dollar. Now, the first question I would ask you is this market bullish or bearish? And before you try and get smart with me and tell me, well, you have to clearly define what you mean by bullish or bearish. Are we talking about higher time frame or lower time frame or what? Don't even try and get smart with me. Okay? Look at this chart and tell me, are we bullish or are we bearish? If you could not instantly look at this chart and tell that we are bearish, then you've got some work to do. And the reason that I say that is because in this particular situation, the very first thing that you have to be able to do when you look at a chart is tell whether we are bullish or bearish. That is of critical importance. And that is one of the very, very first things that we start teaching people in our training courses is learning to understand and read structure. So if I draw this in for you guys, we can see that we have a rally here, a new structure high. We had a break above, close above the previous high. Then we rallied back in, and here's a perfect example. If you are looking, so for example, we broke structure, new structure high. We pulled back. What do we have here? Previous structure resistance should become support, right? But we blew right through that. But did we violate the lows? We most certainly did not. Those lows held. And we got a lower high. Then the market rallied, boom, into new structure highs. We pulled back. Did we violate the lows? No, we did not. We put in a lower high. Then we rallied again. Then we pulled back down. Did we violate the lows? No, we did not. Boom, boom. Did we break below, close below? No, we did not. The lows hold. Then we break out into a new structure high. So again, we're still bullish, guys. You see this? We're continuing to make lower highs all the way up and to new structure highs. Put in a high there. We're still bullish. And then all of a sudden, what happens right here? Boom, we violate them. What do we break? We break one support level. We break two support levels. Did we break the third one? You better believe it. We broke the third one as well. So the last three support levels have now been violated. What should this tell us? It should tell us we have a shift in trend. So what should we be looking at? Well, from here, we look left. Previous structure support should become resistance. We rallied a little bit higher. Did we violate the highs? Nope, didn't even come close. And now we put in a lower high. Market comes back down from there. We retest the lows, break below, close below. We rally back up. Then we pull back down, lower high, and we're seeing now the market trend the other direction. So while we were bullish back here, right here we had a shift to bearish trend, and that bearish trend has held. So where do we find ourselves now? Well, now we find ourselves in a kind of interesting situation because the market is overall bearish. And we have a couple of different options. Number one, we can wait for the market to rally. And we can wait for it to rally back up into previous structure resistance. And then we can look for some other defining shorting area. So we can look for a big doji candle, or we can look for a double top or something like that. Anything that fits into the rules that you've set up. And we can look for that to happen. And then we can look for an opportunity to sell. We can look for an opportunity for the market to break and get overextended and then look to sell the overextension. Or we can look for pattern formation. Because what we have right here, folks, is a very deep Gartley pattern setting up. Now, this requires a few what-ifs or a few assumptions, but let's go through it. So the first thing we're going to look at is this first leg of the move, this X to A leg. And the X to A leg, if we take our retracement and we take a look at that, we're going to see that our first retracement, that's this leg here, retraces into a 618 retracement. Now, initially, this means nothing to us. It's nothing more than just a typical 618 retracement that may turn into new structure lows. But what happens next should be a key indicator for us. So we get our initial rally, then we get a pullback. Now we're going to grab our Fibonacci retracement tool and we're going to drag again. And what do we see? We see another 618 retracement. 618, 618, that keys us in. Alarm bells should be going off. If you've been through the advanced pattern course, if you've been through the 12-week transformation, what should you be thinking instantly when we see 618, 618 retracement? Should be thinking Gartley pattern. Should be thinking 127 extension of the A to B leg. Swing low to swing high. And back down in. 127 extension coming in at 156.18. Look left. Very deep Gartley pattern. Very low risk on this trade. So what I'm going to do is I'm just going to go ahead and bring my little triangle tool in here and draw in what the Gartley pattern looks like. Now, this is a bearish Gartley pattern. The expectation here is if we come up into the 127 extension at 156.18, that we should reverse from here. And we can create for ourselves a little risk to reward profile. And you're going to see just how good this looks here in a minute. So I'm going to grab my Fibonacci retracement tool. I'm going to say swing low here to swing high, and we're going to assume that we stop on a dime right at that 127 extension. And then we're going to take the highs here of the X at 156.63s. We're going to go 73s for stops. So we're going to enter here. We're going to go 73. Excuse me. I was reading too fast. 156.64. So 156.84s or 88s for stops. And then we're going to look for a 382 for the initial targets. So in this case, we're going to have a short that looks something like this. For our initial targets, we're going to have a stop right there above X, and we're going to have targets here around the 382. And this gives us a nice little risk to reward profile of almost 3 to 1. In this particular case, we could even move our stops just a little bit higher, give ourselves just a little bit better than a 2 to 1, give ourselves just a little bit more space on our stop, and still have an excellent risk to reward on this trade. Now, Gartley patterns are right between 65 and 70% of the time, depending on what time frame you're pulling data on. So with this particular trade, if we can get to the 127 extension, now we're not going to buy here because we don't know. The market could reverse on a dime tomorrow. We could come right back up into this previous resistance level and reverse, and the Gartley pattern may never complete. But if the Gartley pattern will complete at 156.20, we know that we have a 65 to 70% chance that the market is going to hit a 382 before it gets stopped out. And if I have a risk-reward profile that is beyond 2 to 1 or that is greater than 2 to 1, how many times do I want to take that trade? Well, the answer is every single time and twice on Sundays. Every single time this particular trade setup presents itself, I want to take that trade. But all the percentages, all the talk about historical perspective and all the historical data that you do doesn't mean anything if you can't follow the rules. And what I try and set up for you guys, and what Akil tries to set up for you guys each and every day in the live trading room, is the opportunity to come in and see it done every single day. In the coaching classes that we do, in the other training that we put out to you guys, in the 12-week transformation of the Pro Trader course, everything is built around creating an environment where you can be disciplined, in giving you the tools that will help you to be disciplined when you're on your own. Because ultimately, guys, the goal at Trade Empowered is to build independent, consistently profitable traders. And the independent part is really important. The independent part means you're not tethered to us. It means you don't need us beyond a certain point once you've learned the skill. And it's our job to teach you that skill so that you can then take that out and use it on your own. And if you want to stay part of what we're doing, it's because you like the community and you like the reinforcement, the discipline reinforcement. It's not because you have to have it. But we have a very special offer for you guys. Next week, you can get into the live room absolutely free. And you're going to be getting an email. You already got an email on Friday. You're going to be getting another one on Monday with access to on how to access the live trading room. It's a full week in the live trading room. Doesn't cost you a penny. Doesn't matter if you've been in there before. You can come right back in next week. And Akil is going to be in there teaching starting on Tuesday. So I'm going to be sending out, underneath this video is a link for you to go and get on the email list if you're not there already. And then you'll get the email on Monday that will tell you what the password is to get into the live trading room for Tuesday through Friday. So make sure that you go and you register for that right now so that you don't miss out. And then I will be back here next week to teach you another lesson or to go over something else that might be happening in the market and hopefully give you some good insights into where the trades are going to be for next week. Until then, good luck, good trading. I'll talk to you then.